welcome to the video. Today we are going to discuss an interesting topic. In the last week's budget session, the finance minister announced a proposal to issue a central bank digital currency starting from the next financial year. So if you are someone wondering what a central bank digital currency is or a digital rupee is, or how different is it from the balances that you maintain in your credit and debit cards that you use to transact on a regular basis, or how different is it from private cryptocurrencies, this video is for you. We will also be discussing a lot of interesting use cases for a central bank digital currency. So let's get started quickly. Before we dive deep into what a central bank digital currency is, let's see how currencies in general have evolved over the centuries. So back in those old days, several centuries ago, there were barter system. So people used to exchange one commodity for the other. For example, 1 kg of rice to 1 kg of wheat. But one apparent disadvantage of this particular system was that it is very hard to find a counterparty that needs the same exact commodity that you are willing to exchange for the commodity that you need. To solve this issue, people started using metal coins, especially gold coins, as a universal currency to buy or sell commodities in exchange of one another. But this method led to another challenge. The ease of storing gold coins in huge quantities was quite difficult during those times, and it became very difficult for the people to carry it from one place to another, as they were more vulnerable to getting smuggled during transportation. To combat this difficulty, a lot of bank-like institutions emerged among different communities where people can deposit the gold that they have in exchange to a receipt that justifies the amount of gold that they had deposited. So later this receipt was used as a mode of currency, a mode of exchange, and they used this as a form of currency. So it is from this phenomenon the concept of central banks emerged, and it started issuing currencies that are widely accepted, and these currencies were issued by the backing of gold reserves in the beginning, but later the dependency of gold reserves was de-linked, and currently the currencies that we have is called the fiat currencies, that is not backed by gold, that is backed by the full faith and credit of the central banks. So obviously the central bank defaulting on their payment is quite unthinkable of, and hence the currencies that we use is just based on the full faith and credit of the central banks. So one key takeaway from the story we just discussed is that though the definition of currency have remained fairly same through several centuries, the form in which it has taken are plenty. This very idea has given rise to a new form of currency that will be used on top of the fiat currencies that we already have, that is the central bank digital currencies. So what is CBDC? So CBDC, or the central bank digital currency, is nothing but the digital equivalent of a country's legal tender or a fiat currencies that is backed by the central bank, RBI in our case. So it has a one-to-one mapping of value. So 100 rupee fiat currency can be exchanged directly with the 100 rupee digital currency. So in that case, one obvious question that arises in everyone's mind is that how different is it from the debit and credit card balances which you currently use? Obviously you do not exchange cash while using debit and credit cards, right? So what is the difference between this digital form of currency and the digital currency that is widely spoken about? So when a person swipes a debit card, the money gets transferred from the account of the payer, who maintains an account with the central bank, to the receiver, who maintains account with another commercial bank. So since the account is maintained in a commercial bank, it becomes the liability of the commercial bank to transfer that money to the respective person. But when you use the digital currency, this is backed by the RBI and is the liability of the RBI to pay the citizen the particular amount. So of course, this is a controversial and a strong statement that I am going to make. Though commercial banks now are quite strong, the chance of commercial bank defaulting cannot be removed out of a bank. So there are chances in the past several years, around 20 to 25 banks have gone into distress, and the depositors were either stopped or restricted from withdrawing their deposits, or they were capped with the amount that they can withdraw on a certain day. So because of this inherent problem that a commercial bank has, Here comes the use case of a central bank digital currency where it removes or delinks a citizen's money to that of a commercial bank, rather links it to the central bank directly. The central bank defaulting on its applications is currently almost unimaginable and unthinkable of, and is also very less likely or not likely at all. So this is one clear value proposition that central bank digital currency brings to the table. So another use case of a CBDC is in the payment or exchange of money. So be it interbank transactions or individual transactions, the introduction of CBDC is expected to bring down the cost of transactions drastically and to improve the efficiency of transaction, make the transfer real time. But when you think about it for a country like India, where we already have systems such as the IMPS, RTGS, or the PhonePe, Google Pay, which have already drastically reduced the cost of transactions, and the time in which the transactions are made are in seconds, if not in milliseconds. So for a country which already have a robust system of payments, the introduction of CBDC, what value proposition is it going to make additionally is a major challenge that the government faces now. So another use case of CBDC is in the place of cross-border payments. So if a person transfers money from the US to India, so it has to go through a lot of banks, correspondent banks across different time zones. So this chain of transactions happens with a lot of inefficiencies because of the commissions that each of the banks takes, and because of the existence of different time zones, it increases the cost of transaction. It also increases the time which is taken for the money to get transferred, and also improves the complexity of the transaction. So the introduction of CBDC in the space of cross-border payment is expected to reduce the cost of transaction and to make payments in a seamless way. The only thing that the government has to do is to set up an infrastructure in place to accept a direct transfer of fund from the US to India. So if you think about it, imagine the scenario where you tender cash in dollars in an airport to purchase a book. So when you tender a cash in exchange of a book, there is no complexity involved at all, and the cost of transaction is almost zero. So this is the level of simplicity that the introduction of central bank digital currency makes to the cross-border payments. Now that we have discussed the various use cases of central bank digital currency, let's contemplate a bit and try to derive certain advantages and possible disadvantages that CBDCs could potentially have. So number one advantage that I could think of is, since digital currency dealing citizens money from their commercial banks, it makes the household money even more safer. Number two, it improves the efficiency in domestic payment ecosystem. Number three, it improves the efficiency in cross-border payment ecosystem by reducing the cost of transaction and reducing the time to transfer funds from abroad to India. Number four, since digital currencies are obviously digital in nature, there can be a data collection from RBI as well as the government of India. So this in turn, when analyzed properly, can paint a good macroeconomic picture of the country, which in turn can be used to formulate efficient fiscal and monetary policy measures. There is another important and an interesting advantage that CBDC has. So this is a concept called seigniorage. Seigniorage is nothing but the profit that RBI makes in printing and distributing money into the economy. For example, if RBI is printing a 2000 rupee note, for it to print the money, store it, transport it and distribute it, it might not take 2000 rupees but somewhere around 500 rupees. So this 2000 minus 500, the 1500 rupees that RBI makes is the profit that it makes. This profit is called seigniorage. So by issuing digital currencies, the central banks stands to profit from this introduction of digital currencies. Of course, the central bank has to establish a proper infrastructure in place in the initial, but in the long run, this drastically reduces the cost of printing. Though we have discussed numerous advantages and use cases of central bank digital currencies, I do not want to leave you with a rosy picture of CBDCs. There are in fact a lot of setbacks and challenges that lies ahead of CBDCs. One is that since CBDCs are digital in nature, it could become potential targets for cyber attacks and illicit activities. So while designing the infrastructure, the central banks have to keep in mind the robustness, the security with which the implementation has to be carried forward. Number two, as we already discussed, the depositors have the possibility of delinking their funds to the commercial banks. This could mean that the commercial banks have to look for alternate sources of funds which could be costlier than the depositors' money. So how does the commercial bank work? Commercial bank procures money from the depositors at a lower cost of interest and then issues it to the borrowers at a higher cost of interest. And this difference that they make is the net interest income. This is how the revenue model of commercial banks work. Now, if depositor starts delinking, of course, the cost of borrowing for the commercial banks increases. This could destabilize the commercial banks, which already is kind of in a distressed state. So this also could mean that in the long run, the commercial banks might lose their relevance, which is a counterproductive phenomenon for a nation which relies on banks for its infrastructure building. Now, another disadvantage could be that currently the government has not issued a clear dimension of what technology will be backing the issuance of digital rupees. If blockchain technology is used, blockchain technology already has allegations that it consumes a lot of power for issuing currencies. If that is the case, can a country, developing country like India, afford to exhaust so much power? Remains to be questionable. So, in the overall space of implementation of this digital currency, we are still unclear on a lot of aspects. Say which technology will be used, what are the use cases that will define the issuance of digital currency, will digital currency garner public acceptance? So all these questions remains to be answered. Let's watch out the space for more information. So I hope next time when you hear news about digital currency or a progress in digital currency, you will be able to relate the context pretty well. So thank you for watching. See you in the next video.